Welcome to my channel, Second PUC Accountancy. Learn, understand, and excel. So let us continue with our first unit, Accounting for Partnership Basic Concepts. In the previous class, we had seen what are the features of a partnership firm. Today, we'll see the next important topic, that is partnership deed. In the partnership definition, we had seen that a partnership firm is created by an agreement. And this agreement can be an oral or a written agreement. So what is this partnership deed? A partnership deed is a written agreement or a document which contains the terms and conditions which are duly stamped and signed by all the partners. So this is called as a partnership deed. So the written agreement between the partners, it can be also called as a legal document which contains the terms and conditions what they agree upon between the partners. And it should be duly stamped, which means that it should be on a stamped paper and it should be signed by all the partners. So therefore, this becomes a legal document which can be used as an important document at the time of disputes or misunderstandings between the partners in the future. So this becomes a legal proof for the existence of a partnership firm. Now we saw what are the terms and conditions. Okay, so we'll see what are the important terms and conditions that are agreed upon by the partners. This becomes the main content of a partnership deed. This can also be asked as a 2-mark question. So therefore, we'll see what are the contents of a partnership deed, or what are the important information or agreement that has to be written on the partnership deed. First, the name of the firm. They have to write and mention what is the name of their firm. Say, for example, if it is ABC firm, okay, they have to mention what is the name of their firm they have decided to keep for their business. The next one is the nature of business, what type of business they want to carry out. Is it a manufacturing business, trading business, or what kind of a business it is? And they have to also mention the location, the address where it is being situated. The second content should be the nature and location of the business. The third content is the duration. How long you want to run your business operation. Is it for 10 years? Is it a partnership firm at will? Or if it is for a venture or for a completion of a particular project. So therefore, you have to mention the duration. Is it for 10 years or 15 years, or is it for the completion of a project, or is it a partnership firm at will? So whenever they want, they can dissolve the partnership firm. So they have to mention the duration of a partnership firm in the partnership deed. Next is the investment. What is the capital invested by each partner? Okay, there are 3 partners. Each partner, how much is the investment they are making into the partnership firm should be mentioned clearly in the partnership deed. Next is the distribution of profits and losses. What is the profit and loss they are going to share between the partners? What ratio or what is the percentage of profits and losses they are going to share between the partners should be mentioned in this particular content. The next content is the duties. They have to also clearly specify what are their duties they have to perform in the partnership firm and what are their obligations to be performed in the partnership firm. Okay, so they should be clear of their duties and obligations that has to be performed in a partnership firm. Next one is the salary. The salaries and the withdrawals which is allowed in a partnership firm. What will be the salary that will be provided for a partner who is actively managing the business firm? If the salary is agreed upon, then you have to mention what is the salary you're going to give for that partner in the partnership deed. And if the partners are allowed to withdraw certain amounts at the time of need, you have to mention what is the amount that can be withdrawn by the partners from the partnership firm. Next is the terms with regard to the admission, retirement, and expulsion of a partner. On what terms you're going to admit a new partner in future, on what terms a partner can be retired, can get retired from a partnership firm, or you want to expel a partner for certain reasons, it should be mentioned in the partnership deed. Next is the interest on capital and interest on drawings. If a partner is investing capital, is the firm going to provide interest on that capital? Then the percentage of interest should be mentioned in the partnership deed. When a partner withdraws from the firm, is he going to be charged with the interest? Then that interest which is charged on the drawings, the percentage of interest should be mentioned in the partnership deed. Next is the procedure for dissolution. If in case the firm has to be dissolved or it has to be shut down or closed, what is the procedure to dissolve the partnership firm should be mentioned in this particular content. And the last one, the preparation, how we are going to prepare the accounts and audit your accounts in the partnership firm should be mentioned. The method of preparing the books of accounts and the method and the procedure of auditing the books of accounts should be mentioned in this particular content. And then if any disputes arises in the firm, what are the methods you're going to adopt to solve these disputes between the partners? Okay, has to be mentioned as another important content in the partnership deed. So these are the important contents which are present, which have to be agreed upon between the partners, and it has to be mentioned in the partnership deed, and it should be agreed upon by all the partners, and it should be signed by all the partners, which is called as a partnership deed. So now let us see how to treat the following in the absence of partnership deed. In case certain terms are not agreed upon by the partners, then in that case, how to treat it in the partnership firm. In the absence of partnership deed, the firm should follow the treatments given according to the Partnership Act 1932. We'll just see one by one now. First, in case of interest on capital. If interest on capital is not mentioned or agreed upon by the partners in the partnership deed, then how do they treat it in the final accounts? So therefore, in the case of interest on capital, the firm will not be liable to pay interest on capital to the partners on the capital amount which is invested by the partners. So no interest on capital will be provided by the firm to the capital invested by the partners. Next, interest on drawings. Similarly, even for the interest on drawings which are made by the partners from the firm cannot charge any interest on such drawings made by the partners from the firm if it is not been agreed upon by the partners in the partnership deed. Next, interest on partner's loan to the firm. If the partner has given loan to the firm, then in that case, whether if it is not mentioned in the partnership deed, then according to the Partnership Act 1932, 6% interest is to be paid by the firm per annum to that partner for the loan taken by the firm from the partner, or it should be according to the partnership deed. Next, distribution of profits or losses. If the profit sharing ratio is not been agreed upon by the partners in the partnership deed, then profits and losses will be distributed equally by the partners, by all the partners. So all the partners have to distribute the profits or losses arising out of the firm equally between them. Next is the salary, commission, or any remuneration that has to be paid. If the partnership deed does not give any amount that has to be paid as salary or commission to the partner, the Partnership Act, salary or commission is not payable for the partners.